Joining us now to talk further about that is Peter McGuire. Peter, hi, thank you so much for taking time out. What is your sense with the kind of run-up that we have seen? Would you say much has been now factored in, or would you say May and June and July would bring in much more uncertainty, volatility and higher prices?
Well, good afternoon, Manisha. I think there's probably more upside over the next couple of months, and the reasoning is quite simple. We don't know how these sanctions are going to bite further on Iran and as far as their situation, nor Venezuela, and the unknown with Libya. We understand the aggressive stance that the Saudis have taken as far as production cuts, and I think that probably in some ways leading into the next OPEC meeting, all the producers, that's the end of June, are going to be very, very satisfied with pricing, how it's rebounded so heavily since Christmas. So I think if you get some more geopolitical shocks or some weather outages, there's certainly further upside yet.
So how much higher from here, Peter, are you expecting the crude oil prices to be? I mean, I know we've been talking about $75 per barrel of a mark for the Brent crude. Do you see that happen in this quarter?
Well, we're only early in the quarter. We've got, the best part of about 10 weeks left, and I feel as though that it's probably very achievable. US dollar, if you're looking at what it's done since Christmas, it's been fairly range-bound, that dollar index, 95 to about 97.5, sitting at about that high 96s, 97 now. Now, that's been very flat, really. If you take into consideration that a market's up 42% like WTI, I feel as though there's more momentum. It's a bull market. Don't make any questions about it. And I feel as though that there's so many moving parts, there's a big chance you're going to see further upside. And Manisha, I've been around here too long. These are the years that sometimes weather outages really amplify, and this could be one of those years.
Oh, well, absolutely. With what we are working, and if we do see weather outages and more geopolitical tensions, then definitely there could be some more gains coming in for the crude oil prices. But tell us on where, the markets would be comfortable as a level with. As of now, as you said, we are working with the momentum on the higher side. There is a lot of uncertainty. But when it comes to U.S., with the U.S. president been asking to the OPEC to not continue to cut output, and the consuming countries like India, where we would want prices to stabilize now, what is your sense, or what do you think your stand would be from the consumer countries, or US rather, with the kind of crude price rise we are seeing?
Well, I think we're going to get some serious volatility in the sense of how much Twitter activity from the president. I think that will only amplify over the coming weeks, because he's conscious that this is really going to start summer driving season in the States, which takes off in that May, June, July period. People go on holidays and they're paying 20 cents, 50 cents or $1 more for a gallon of gas, then that's really going to impact him. He needs cheaper prices because he's going into an election year next year, and he needs a growing economy, not something that's got a handbrake with high crude prices. As far as India is concerned, President Modi's in the same situation as far as, Prime Minister Modi, I should say, as far as the similar situation there as far as elections and higher pricing. So at the moment, I think that the hand is very much on the Saudi and the Russian side and OPEC side versus the others.